In a positive sign for investor sentiment, inflows into equity mutual funds surged by 14.5% in the month of December, according to data released by the Association of Mutual Funds in India. Equity mutual funds saw inflows of over 41,000 crore rupees last month, a major jump from 35,900 crore rupees in the month of November. Mid-cap funds recorded an inflow of 5,000 crore rupees, up 4% from the previous month. However, the large cap companies and funds faced a decline of 21%, with inflows dropping to 2,000 crore rupees. Small cap funds also witnessed a 13.5% increase, garnering over 4,600 crore rupees, while flexi-cap funds saw a slight dip of 7%, ending December at over 4,700 crore rupees. But the major spike was seen in the inflow of sectoral and thematic funds, which saw a jump of 100% to 15,331 crore rupees. Joining me to make sense of all this data this morning is a very special guest. Feroze Azeez, Deputy CEO of Anand Rathi Wealth, joins us. Feroze, looking at this data month on month, especially amid the volatility that we've seen in the month of December, what does this data tell you about the Indian investor? Is there this undoubted faith in the Indian equity story?
Good morning, Kartik. Of course, like you rightly pointed out, there is an undoubted sentiment that India's growth story is very much intact from a long-term standpoint. And I personally think that the narrative that these are new investors, they don't know how markets fall, is incorrect, because they have in 21 and 22, 23, in about 2 year periods, Nifty touched about 15,000 twice, thrice, and 18,000 three to four times before it came back to square one in 2 year period. So I personally think the growth story sentiment is intact, point one. Point two, the retail is not stupid. They're not chasing only equity. They're still putting only 8% of their total savings last year into equity. I hear this narrative that retail sirf equity ke piche bhag raha hai. 42% of the total savings went into deposits last year, and only 8% went into equity mutual funds, not even equity mutual funds.
All right. And you are talking about the fact that retail investors are now obviously coming of age. We see some sort of a maturity given that markets were volatile, and the diversification. You're saying the retail investor is playing both the equity and the debt game.
Absolutely. They're playing the equity and the debt game. If you look at how India has distributed its current balance sheet, which is the total 840 lakh crores of savings till last year, what did they do with the new savings this year, well, the year which went by? You'd be surprised, out of the 850, 880, 870 lakh crores, there's only 6.7% of the financial assets. That is almost like about 4% of the total assets of Indian households, individuals, I mean, and HUFs in equity. And people think that we have come to a story of a very large increase in equity participation. The answer is no. Because you see, if I total the last year's total saving allocation, 42% is debt, some 15% is EPF, 20 odd percent is small savings and other debt instruments. So in financial assets itself, Indian households save 70, 75, 80% in debt alone. And why would that be called a full equity pull? I don't think we've still seen the full equity pull. Is why you see in a month like last month, where the markets were volatile, the equity SIP number came so high, 26,000 odd crores, which is almost like a 6% increase in a month's time.
Absolutely. I want to also understand the risk appetite of the retail investor, Feroze. We are seeing that there is a pull away from the large cap stocks, the household family names of corporate business houses, which are part of the Sensex or the Nifty, and the investor is going after small caps, the investor is going after thematic funds. What are these funds?
Wonderful.
What is this risk appetite of the Indian investor?
See, there are two separate things. Thematic and sectorial funds are largely an AMC narrative. Let me be very straightforward. Because
Okay.
conventional schemes, SEBI has permitted one per category. All those categories are filled in all asset management companies. So now the only open category is sector and theme. Uske alawa koi NFO aa nahi sakta. So sector and themes could be very, very vast canvas. You can create a sector. There are about 400 sectors mentioned on NSE's website. You can keep creating new funds on any of those sectors which you think are relevant. Not that AMCs are not being responsible. They're launching the right sectors at the right time is is a study which we did. So that's a separate story. That's an AMC need to create enthusiasm to penetrate the retail market or the tier 3, tier 4 towns, which I think is a good strategy to begin with. Now, from a retail standpoint, also because otherwise people don't come in. Once they come in, then they become permanent investors in the mutual fund industry.
All right.
The
And when
second
you
part
talk
of the
about, yeah,
question,
go ahead.
sorry,
Go ahead. Go ahead.
the second part of the question, Kartik, sorry to take a longer answer, because both of them are very, very different. Now, the small cap story, I think small cap does not represent the risk of India only. Because there are 2 points I would like to make. In India, if there are 2,400 traded stock on NSE cash market, the top 500 actually encompass large cap, mid cap, and small cap as per the definition of AMFI and SEBI for mutual funds. 500 स्टॉक में पूरी तीनों कैटेगरी खत्म हो जाती है. The 1,800, 1,900 stocks are not even in the radar of mutual funds. So small cap, as the name suggests, is not as small as what the English word will make us to believe. That's point one. Point two, India has only 3 lakh crores in small cap through mutual funds. 3 lakh crores out of 840 lakh crores is 0.3%
All
of
right.
the total household savings. If a caller calls me on a show like this, or Kartik will recommend put 10% in small cap. India has put only 0.3% in small cap.
Right. So, what you're trying to tell me is that small cap is a much smaller segment of the total mutual fund AUM, and it is basically on this low base that we are seeing a higher percentage growth. Am I right in my understanding?
Yes, absolutely, Karthik. And the total small cap, which is the 250 stocks of NSE's 500, which are categorized as small cap, you have mutual funds having invested only 3 lakh crores out of the 69 lakh crore, which the mutual fund industry grew from 51 lakh to 69 lakh last year, or 2024.
And this 100% rise in thematic funds and investments going into thematic funds, which are the themes that investors are chasing?
See, investors are chasing some unconventional themes. Last 1 or 2 themes which were born. Some themes are born in a specific month. Some themes are penetrated in a specific month. The one which was born in November and December theme is the capital market theme. So Nifty Capital Market Index was launched, and a few NFOs have come there. That's a thematic fund. I should also give you my disclaimer that NSE Capital Market Index also has the stock which I work for, Anand Rathi Wealth Limited. Having
Okay.
said which, that's one theme which has got some momentum, because if the financialization of story of India is real, the barometer on which you can probably, or the proxy on which you can play the Indian capital markets is a high beta sector like the
Okay.
Nifty Capital Market Index.
All right. And we are just weeks away from the budget. We will have you with us, Feroze, on budget day and prior to that as well. But we are close, just a few weeks away from the budget, and we are at the start of the calendar year. The IPO story is another story which investors, retail investors, really like to participate in. How do you rate 2025 as the season for IPOs?
I think one hypothesis, I think the IPO, to answer your pointed question first, before I can make a couple of points, I think the IPO season will continue.
Okay.
I think there are a lot of businesses who have filed for their DRHPs with SEBI. If you see, we are almost at the all-time high at a point in time,
Right.
approval spending. So I think IPO's dearth wouldn't be there in the year calendar year 25. But I think when you come to the IPO market, one thing which perturbs me is most people are using IPOs not as a long-term investment.
Okay.
In the first 2-3 days of listing, the
Listing
total
day
volume
gains.
on those stocks are greater than the actual free float.
All right. And what are your specific expectations from the budget? Do you think there is something in the budget that can come by way of further boosting the investor sentiment?
Yes, Karthik Saab, I think investors and I personally, if you ask me as an investor, I would say please make no changes. It
Okay.
takes me years to understand the whole entire sections. And then if you have had so many massive changes on 23rd July 24, all the taxation from an investment standpoint for all asset classes have been tampered with. Don't make another direct tax code change, which Madam said in the last budget. So my expectation as an investor from the budgets, and not just this, is to make sure that you're allowing people to acclimatize to the new temperature and learn it.
Okay.
Now coming to other investors' expectation, my clients' expectation, the retail's expectation is to make debt and equity taxed at the same rates. Most of the countries have only one rate for capital gains. I think this whole narrative that debt funds can never become long term and they will remain short term even after 100 years itself is an oxymoron. Short term has to end. So debt funds never become long term, even if you hold it for 20 years, which is
All
not
right.
mathematically right, neither is it logically right.
All right. And we've been speaking for the last few years, Feroze, and there is this formula for asset allocation. Now, in the context of rising gold prices, in the context of inflows into both equity and debt, is the asset allocation of about 70-20-10 still holding true?
I think, yes, Karthik, 70 into equity, I think is mandatory. My love for debt is very low. If you want to replace debt with gold, I would definitely appreciate that because debt has no potential of capital gain, unlike the narrative. Interest rates coming down will not result in bond prices going up because when interest rates went up, repos and reverse repos went up, bond prices didn't go down. People have not lost money because the yield curve has been flat and the 10-year GSEC has not moved up. So I don't see a large potential of it coming down when the reports get reversed. So to answer your pointed question, 70, 10 and 20 could also be a mantra. Only 10 towards debt and 20 towards gold and 70 towards equity could be better, unlike getting married to debt, which Indian households have. I think it's painful to see Indian households stuck at 7.5% lending to government and corporates.